Hello and welcome to Sprott Radio. I'm your host, Ed Coyne, Senior Managing Partner at Sprott Asset Management. Joining us today is Justin Huhn, founder of Uranium Insider, which provides news, analysis, and focus on all things uranium. Justin, thank you for joining Sprott Radio.
It's my pleasure. Good to see you, Ed. I'm happy to be here with you today.
Well, Justin, before we unpack the world of uranium, please tell our listeners a bit about yourself and your newsletter, the Uranium Insider.
Sure. Well, I've been in the markets for more than a decade. I started out primarily as a technical trader, momentum trader, breakout trader, and did that successfully for a number of years leading up to my initiation, let's call it, with the uranium thesis. That happened late 2016, coincidentally was within a month or two of the actual bottom for a U3O8 commodity, for the spot commodity, which was just under $18 a pound. And was just very intrigued by a couple of things. One was this fundamental contrarian investment into something that was absolutely hated and ignored. And two was that I realized I knew absolutely nothing about nuclear energy, and my preconceived notions about it were utterly wrong. I've always enjoyed having my own mindset or my own thinking about something turned on its head. I don't know why. I enjoy that humbling experience of being wrong about something, and that piqued my interest. And the investing side of it was this contrarian bet with potential huge upside in terms of investment returns. Looking at the previous bull market was one for the ages. And this was a multi-year, very patient investment. And that was something that was utterly 180 degrees from the type of investing or trading that I had been doing. So I really, really enjoyed that. And I just continued to build on my knowledge about the space. As I continued to dig deeper, the investment thesis got more and more interesting. The risk reward was huge, and I believe still is, even though the commodity has basically 4x'd from that point, from the very bottom. So I just built up a community on Twitter, or I joined a small community at the time and started to build some knowledge around it. And I enjoy communicating. I enjoy educating on subjects that I know perhaps a bit more than the average person about. And that built up into this Uranium Insider Twitter account, and started writing about it. Started a free newsletter that I was just writing about kind of the macro elements of this sector and of this investment thesis. And that basically just organically led to a paid newsletter product that I've been doing now since August of 2019. So we're over 4 years now. And it really, honestly, was a very unintentional but organic process, and have turned it into a great community. I have a partner and a small team working for me, and it's really just a very exciting, very interesting space. And it's gone from this terrible, hated sector where you were making a bet, a super contrarian bet on it going from absolutely awful to just bad, and it has turned into a sector where there's basically a nuclear renaissance happening on a global scale, and the potential for this to be a very, very long-term, almost like quote-unquote super cycle type investment is certainly on the table.
You talked about 4x plus from the bottom, but 2023 has been no slouch either. It's been a really great year for those that are currently focused on and watching and tracking uranium. It's been a wonderful bright spot in a pretty volatile year for most investments. What's driving the most recent performance in uranium? What's the primary causes there?
Oh, it's definitely the performance of the spot price of uranium itself. So the uranium itself, the commodity, is up almost 50% this year to date. It's a huge, huge move, and it's contrasted, of course, with kind of an underperformance of a lot of the rest of the commodity space. And that has to do, in my personal opinion, of, kind of on the back of a relatively good run for commodities in the previous couple of years, and looking at going probably into a recession. Maybe we're already there. Deflationary effects that typically influence commodities performance during periods of recession. And uranium is flying in the face of that and doing the exact opposite. And we think that there's a lot more upside to the commodity itself. But a 50% move in the spot price is very, very large. The case for the commodity is very, very strong.
Investors who have been piqued by the current move, have they missed it? What should they be worried about going forward? What would you say to somebody that you meet at, say, a cocktail party that says, gee, I've been reading about uranium. I'd like to be, part of this, but gee, it's ran up so much. Maybe I've missed the boat. What would you say to someone like that?
We focus most of our energy on the actual fuel cycle in the physical market. And everything Everything that we look at in that space right now is pointing to higher prices. There's nothing that we can see in the near, mid, or even long term that looks to us like a good case for a falling uranium price. I just don't know where that will come from. There's, of course, always the exogenous event possibility of a reactor meltdown or something like that that hurts sentiment in the short term. If it hurts demand, that can hurt the price of uranium in the mid to long term like Fukushima did. But near term, very hard to predict. But I can say with a pretty high level of confidence, we expect the price of uranium itself to continue to move higher.
It seems like this whole supply-demand equation, in theory, or I guess in actuality, seems to be a multi-decade issue or opportunity, depending on what side of the table you're sitting on. Is that because more reactors are coming online? Is that because shuttered reactors are now reopening? Walk us through that a little bit of why you think this is a multi-decade opportunity, and will that supply-demand disconnect continue for the foreseeable future?
Yes, it definitely will be continuing for the foreseeable future. Now, there's always inventories that can buffer a bit of that undersupply problem, let's call it. So the investing side is always seemingly wanting this panic moment where the utilities just realize their hair's on fire and they're running for the exit door and doing everything they can to secure pounds as fast as possible. That usually doesn't happen unless there's a significant event that triggers a panic. Utilities have inventories for a reason. It takes 2 years for the material to go from mined uranium all the way through the fuel cycle, through conversion, enrichment, deconversion, and then fuel fabrication. That takes a long time, and the reactors are multi-billion-dollar, very important strategic assets that they can't not fuel. So you have to think ahead as a nuclear fuel buyer for a utility. And part of the way that they de-risk the operations of that particular plant is by holding inventories. So inventories always act as a bit of a buffer, but we do see a supply deficit going out for many years, possibly for as long as we could look out into the future. Now, there's a number of interesting supply elements that could come online in a very long-term time frame with sustaining high prices, like uranium from phosphates or uranium from seawater, things like that. Neither of those things are elements that could come and solve this problem within the next 5 to 10 years. That's just not possible. Basically, we have a backdrop of a stable and growing demand. So, anytime you're looking at a commodities investment, the basic first place to start, okay, what's the supply of this commodity? What's the demand? So the demand is about 180 million pounds per year in this year of uranium. That is the burn-up rate of the global nuclear fleet. That does not include inventory restocking. That does not include financial buying. That does not include producers buying uranium, all of which is happening currently. So the actual demand on an annual basis is a little bit more difficult to put your thumb on, but it's probably somewhere to the tune of 200 million pounds for this year alone. The mined supply out of the ground this year is going to be about 145 million pounds. We'll have a bit of secondary supply. Usually that comes from underfeeding from enrichers, but the underfeeding in the West is basically gone. So maybe we'll have 15 million pounds of secondary supply, which brings us to about 160 million pounds. That means on a supply and demand basis for this year, a snapshot of this year, we're about 40 million pounds short on the supply side, looking at overall demand to overall supply. Production should slightly increase in the next few years, but demand is also increasing. So to give you an example, the World Nuclear Association has they do great work. They have a fantastic website, and they update their modeling all the time, almost on a monthly basis. So they've just recently updated. There's 436 operating reactors or operable reactors in the world right now. Some of those are actually idled, like in Japan. There's 61 reactors under construction right now globally, 68 gigawatts of new nuclear that's literally currently under construction. There's 112 reactors or 109 gigawatts that are ordered or planned, and there's over 300 that are proposed, 350 gigawatts. So it's a huge, huge story. We're looking at, honestly, probably a 3 to 4% compound annual growth rate for the sector right now. And almost half of the new builds currently that are under construction now are in China. Almost half of them. So they're going all out. What's also happening is existing reactors are becoming increasingly de-risked. So there's been a recognition of the importance of having stable, clean baseload power. I just attended the Nuclear Energy Institute conference in Charlotte a couple weeks back. In the opening opening presentation for this conference, he basically said, in years past, there was a table that they called the table of shame, where they showed premature reactor shutdowns. That table isn't there this year because there are none.
Wow.
So we're seeing life extensions all the time. And life extensions are immediate demand in the uranium market. And I should leave that there for now. But new reactor builds, life extensions, and even restarts like in Japan and South Korea.
Let's talk about life extensions for a minute. I think some people mistakenly think, well, gee, you're taking an old reactor that should be shut down and you're continuing to operate it, so it's going to be dangerous. But life extension is really more about the licensing, if I understand that correctly. Can you walk us through that a little bit, what that actually means, so people can get a better sense of, yeah, this reactor that was going to be shut down or is shut down is going back online. Is that a good thing, a bad thing? Is the safety features there? Like, what's going on with that? Can you just describe that a little bit for our listeners?
I mean, as far as we're concerned, not only from an investment standpoint, but from just a nuclear advocacy standpoint, life extensions are very, very positive. So when a reactor comes online, it's given an initial operating license for initial lifespan. So in the United States, it's 40 years. In Japan, it's 40 years. But when the reactor is getting close to the end of that initial operating license timeframe, they can apply for extensions, and they usually do. So we're looking at 60-year operating lifespans and up to 80 years and possibly even longer here in the United States.
Wow.
In Japan, their fleet is a little bit younger than here in the United States on average. And they just granted, for the first time ever, a 60-year operating lifespan to two reactors in Japan that were coming up. Their 40-year lifespan was ending, I think, at the end of the decade. And so they applied for that and they received it. So the NRA, the Nuclear Regulatory Authority in Japan, just now, in this past week, gave their first 60-year operating license to reactors in the country. So that's a first for Japan, and there's more coming on that front. Same thing in the United States. There's clean energy production tax credits that come from the Inflation Reduction Act that was passed last year. So there's a lot of funding in the IRA for extending the lives of the operating plants in the United States. PG&E got a 5-year extension for the Diablo Canyon plant in California. They just put in their application for a 20-year extension. The Perry plant in Ohio has a life extension application in place. There's a couple of others that are also in place right now. We expect the entire U.S. fleet to get life extended, basically. So it adds immediate demand as well. Mm-hmm. So when PG&E got that, they expected the reactors shut down 2024, 2025. As soon as they got that 5-year extension approved, they were in the market. Earlier this year, a big fat RFP in the market, and it actually shook up the market a little bit. The Koreans have a big RFP in right now for a construction restart that was idled with the previous anti-nuclear administration that was in place. So there's just been a big shift.
Let's go back to supply for a moment. Current mines out there, current refineries out there and so forth. At the current prices, are they profitable today? Are you seeing these companies making money off the current price of physical uranium?
The producers that are currently operating and producing and selling uranium right now are definitely making money.
Okay.
But it really varies between which producer and how much they're producing and how they're selling it. So current producers are doing well, but the slow pace and the complicated nature of bringing uranium mines online, even care and maintenance mines, but especially greenfield mines, makes the supply very, very slow to respond to an appropriate pricing environment. And we're getting there. The price is $74 a pound. You know, there's some production that's working on coming online.
Let's talk about that for a minute, because I guess the next step would be maybe a mine that had shuttered because the prices got so low. I think you said the bottom was $18 a pound or right around there, and it wasn't profitable, so they just basically turned the switch off and walked away. Do they need it higher than $70, $75 a pound? Is it $85 a pound? Like, what is their break even to say, you know what, let's flip the switch back on, let's start producing more uranium, let's try to put more supply into the market? In your mind, what would a price point be for a shuttered mine to go back online?
It largely depends on the mine, of course. But right now, there's a number of care and maintenance mines that are working with their way back towards production. So that would be Paladin's Langer Heinrich in Namibia. That's 5 or 6 million pounds a year. 25% of that goes straight to China. They're working on bringing that back online. They should have first production, I believe, next year, with full production 2025. That's what's estimated anyways. Cameco just restarted MacArthur River last year, and they should get 12, 13 million pounds out of that this year, full production. They're looking at 18 million pounds next year. Obviously, the pricing environment is good enough for that mine to come back online. That's a very big, complex mine. There's a number of smaller mines in the United States These are primarily ISR, in situ recovery mines, where there's like a series of wells rather than an open pit or an underground mine. Okay. Not a whole lot of production is going to come from there, but we're in a pricing environment that makes that justified. So maybe 1, 2, 3 million pounds over the next few years out of the United States. Also, care and maintenance, ISR mine, the Honeymoon mine operated by Boss Energy in Australia. That's working on coming back online. They should have first production in the next few months. Besides that, there's mostly just greenfield mines that are at various stages of development, and there's not a lot on that front.
And what would you need for you and I to start a mine tomorrow? Is it we talking over $100 a pound sustainable to say that could justify us starting a business or starting a new mine, going into the permitting process? Just in general, of course, it's going to depend on where and the location and so forth, but what kind of pricing are you seeing on that side?
It of course depends on the grades and the type of mine, right, and the size of the mine, et cetera. To give you an example, so now we're at $73, $74 a pound spot uranium, and there's a number of development projects in Namibia that are lower grade, big open pit, hundreds of millions of pounds of uranium, but it's low grade. It takes a decent amount of capex to develop these mines. The last big open pit, kind of low grade uranium mine that was developed in Namibia was the Huhn mine by the Chinese, and that went way, way over budget. They spent billions of dollars to get this into production. Now it's cranking. Now they're producing 12, 13, 14 million pounds of uranium per year out of Huhn. But that was a very big, very, very expensive, complicated project to get online. And there's a number of companies that are operating in Namibia that have these large development assets. None of them have signaled to the market that they're working on bringing those towards production yet. To look at the supply and demand dynamic and to recognize that the marginal pound is going to set the price, those marginal pounds are in Namibia.
Okay.
We're going to need those development projects producing uranium by the end of the decade. In order to do so, prices need to be higher than they are here. So wherever that is, $90, $100 a pound, probably somewhere in that ballpark. But also you have to remember, we could be at $90 a pound in 6 months. Doesn't mean uranium's coming out of Namibia in 6 months.
Right.
You're going to have to add 2 or 3 or 4 years and billions of dollars of capital in order to make that happen.
Well, and we've talked a lot about miners. We've talked a lot about the plants themselves. Are there any halo effect or other industries that one could look at when thinking about uranium? Is there any other parts of the world or other parts of industries that people say, hey, this is something I should maybe also think about investing in, which will benefit from this movement?
That's a really interesting question. I mean, uranium mining is the obvious one. You of course, can invest in the commodity itself. It's more difficult to invest in the fuel cycle, but you can invest in enrichers. So there's Centrus, which is based in the United States. They have just produced their first HALEU, their high assay low enriched uranium, which is going to be kind of the quote unquote fuel of the future for these advanced reactor designs, higher enrichment. There's a company called Silex that has majority ownership of global laser enrichment, and Cameco has minority ownership of that. Some interesting developments on that front, hopefully for the next few years and beyond. It's harder to invest in conversion in the fuel cycle. There's a couple of fuel fabricators, but for the most part, it's uranium. There's kind of an interesting sort of use case for nuclear, especially with small modular reactors, for producing hydrogen, because hydrogen is basically a storage mechanism of energy. It's not a source of energy. So I think they call it pink hydrogen, is hydrogen produced from nuclear. I think that there's an interesting relationship between hydrogen and nuclear going forward. That's something I think to look at. Kind of an exciting potential future for investable small modular reactor developers. So right now, the only one that's publicly traded, at least in the States currently, is NuScale. Then you have Rolls-Royce. Of course, they're not only doing small modular reactors, but there's so many other. There's over 100 designs. And some of these companies will be going public in the coming years, and I think that that's a place to watch, is to invest in the actual nuclear builders and designers.
We've talked about the SMRs or the small modular reactors in the past, and when are they going to hit the market? Is it in the next 10 years, next 5 years? Talk a little bit about that, and then we'll start to wrap it up a bit. But if you could just spend a little bit of time on the SMRs, because I always think that's a fascinating, huge technological shift in the way we think about nuclear.
So SMRs stands for small modular reactors. It's kind of a vague descriptor, but it's basically reactors that are smaller than, generally speaking, like 300 megawatts. The typical large reactors, 1,000 megawatts, or in that ballpark. There's a lot of exciting features around the proposed SMR designs that are being engineered and in some cases developed currently. The modular aspect of them is that they would basically be like airplanes instead of airports. So building the actual parts for the plant in a factory, shipping them and assembling them on site. And to some extent, that's sort of what happens with large-scale reactors, but there's various different designs, and a lot of supply chain problems can come from these larger reactors that potentially could be addressed with these smaller designs. A lot of them are walk-away safe, so they're basically meltdown-proof. Either they're using newly designed meltdown-proof fuel, or the designs around the core essentially allow them to be operated without personnel. And you could have personnel basically not show up for work that day and the reactor wouldn't melt down, kind of thing. A number of them use higher enriched uranium, so they're more efficient. They can operate at higher temperatures. There's industrial heat. There's community heat aspects that you could utilize from these reactors. In fact, one of the developers, X Energy, they have made a deal with Dow Chemical in South Texas to develop and build some small modular reactors in South Texas where they would be utilizing industrial steam. Basically, these are high temperature gas-cooled reactors that would pair very, very nicely with chemical producing companies. So there's incredible opportunities in the market that are not just electricity producing for small modular reactors. But then, of course, it's the size, where a large reactor, you're producing 1,000 megawatts of energy. You can only pretty much utilize that in a place where there's an established grid and infrastructure and decent size enough of consumers, local cities and whatnot, that can consume that amount of electricity. But if you're producing 50 or 100 megawatts, you can put that in a much smaller community, or potentially like a military outpost or powering a mine or something like that. So these things are all possible. A lot of these designs address safety concerns, even though nuclear actually is statistically the safest source of electricity that's ever been conceived, period. Still, you have people question the safety because there's been a couple of accidents in the past that obviously are top of the headlines. In a lot of ways, the SMR quote-unquote revolution is exciting for people that are skeptical about large traditional nuclear. With all of that said, the first small modular reactors are just now starting to be constructed. There are 4 GE Hitachi BWRX-300s being built in Ontario currently at the Darlington site, where there currently is a large reactor. Those are in the early stages of construction. OPG is already in the market buying uranium. So we're already seeing demand for these first SMR builds. The Chinese have an SMR build under construction currently, but there are hundreds and hundreds of LOIs and MOUs around the world for various SMR designs. There's a lot of momentum around it. It's hard to model exactly how much demand will be coming from these, but it is very interesting to see that the first ones that are being constructed with first expected electricity production not until maybe late decade, probably early 2030s, they're already in the market buying fuel. So Trade Tech is one of the primary nuclear fuel consultants. They predict that we'll see 200 million pounds plus cumulative uranium demand from small modular reactors alone between now and 2035.
Wow, that just so we're talking in our lifetime. I'm a bit older than you are, but in our lifetime, this supply demand thing doesn't seem like
it's looking very robust for the future. Like I said, if we see sustained prices, $150, $200 a pound for many, many years, we're going to see some innovation on the supply side. There's potentially billions of pounds of uranium and phosphates. It's just not something that's there at these prices that is going to stem the tide in the next decade. So, and I'm a nuclear advocate. Beyond this investment that we're in currently, we see could last for many more years. I'm looking at nuclear going out for the rest of my life and wanting to see a growth in the industry. Not just for my own financial interest, but because I believe nuclear really is the answer to a lot of the questions plaguing humanity currently. And we need more supply of uranium that's difficult to get out of the ground in enough quantities. If we want nuclear to double or triple, we're going to want to see uranium from phosphates and potentially from seawater and all of these things. But still a lot of it in the ground and plenty to keep the world operating on nuclear and for nuclear to grow at these rates for the next 100 years for sure.
Well, this has been fantastic. I mean, the level of stats and knowledge you have is incredible. So hopefully our listeners enjoyed that as well and learned something today from that. But before we sign off, is there any last points you want to make that I didn't ask that you think people would find interesting or informative that you want to leave us with?
I think the most interesting thing right now currently is looking at China and their build out, because there's so much misunderstanding about the Chinese inventories and Chinese uranium production and their needs to be purchasing. So they by far have the more inventories than any other country. They probably have 400 to 500 million pounds of inventory. They currently have about 55 gigawatts of nuclear. They're trying to achieve 150 gigawatts by 2035. If at that point, 150 gigawatts by 2035 is about 70 million pounds of uranium per year of consumption. Just China. So China doesn't really have domestic uranium other than in, phosphate tails, but they haven't started to explore that because it's cost prohibitive still at this point. In the ground, they continue to try to explore for uranium, and they're coming up with dusters. So they are out in the market buying a lot of uranium. They've had, like I mentioned, they have 2 very large contracts just this year with Kazatomprom. They're probably, once they soak up as much as they can from Kazakhstan and Uzbekistan, they're probably going to go into Africa even further, look at Namibia, possibly Niger. Just recognize that the China story is not a bearish story in terms of the amount of uranium they hold. And so everybody's always concerned that we're going to hit certain price of uranium. All of a sudden, you're going to see supply come into the market. And while that's in theory possible, the evidence has been the exact opposite. When we were at 25, the market was concerned, we're going to hit $40 a pound. Kazatomprom is going to open the taps, and we're going to see inventories start to flood into the market. Didn't happen. Now we're all the way to $75 a pound, and the market is tighter than we have ever seen it, ever. Not just since we've been watching it. We have connections throughout the industry. There's people that have been working in nuclear for longer than I've been alive. They said they've never seen a market like this. It is incredibly, incredibly thin. So the evidence is the exact opposite. The price has gone higher. Inventories are being held on more tightly. The Chinese and the Russians, who have been marginal spot market sellers in past years, have both turned to buyers this year. So there's just an absolute swing in sentiment, in selling turning to buying, and then a huge shift from a buyer's market to a seller's market. So we're in the early stages of that seller's market. We are in year 1 of a contracting cycle for nuclear utilities. There's a lot of exciting developments that I think are going to lead to higher prices continuously for the next few years and potentially beyond that as well.
Well, it's exciting just to listen to this. And again, I hope everyone walks away from this podcast today feeling the same. But Justin, we really appreciate you taking the time to share your views and thoughts on Sprott Radio. And I tell all of our listeners that if you want to learn more about what Justin's up to, clearly after listening to this podcast, you see he's a plethora of information. He's got a ton of extensive work on uranium. He has a great newsletter featuring what he calls the Insider Pros Focus List, which talks a lot about the names and opportunities that we talked about today. So I encourage you to take a look at him on his website, which is uraniuminsider.com, and catch up on what Justin's working on. Once again, my name is Ed Coyne, and I appreciate you all listening to Sprott Radio. And thanks again, Justin, for joining us.
It was my pleasure. Thank you, Ed.
This podcast is provided for information purposes only from sources believed to be reliable. However, Sprott does not warrant its completeness or accuracy. Any opinions and estimates constitute our judgment as of the date of this material and are subject to change without notice. Past performance is not indicative of future results. This communication is not intended as an offer or solicitation for the purchase or sale of any financial instrument. Any opinions and recommendations herein do not take into account individual client circumstances, objectives, or needs, and are not intended as recommendations of particular securities, financial instruments, or strategies. You must make your own independent decisions regarding any securities, financial instruments, or strategies mentioned or related to the information herein. This communication may not be redistributed or retransmitted in whole or in part or in any form or manner without the express written consent of Sprott. Any unauthorized use or disclosure is prohibited. Receipt and review of this information constitutes your agreement not to redistribute or retransmit the contents and information contained in this communication without first obtaining express permission from an authorized officer of Sprott.